Welcome back to the Contrarian, everybody. Today I'll try to answer a question that might be on a lot of people's minds right now, given the fact that I've talked with David Hunter 3 times now, and all 3 of these times have roughly corresponded with being on the beginning end of his melt-up thesis. And if you're not familiar with his melt-up thesis, I would recommend listening to one of his interviews. Probably the most recent ones out there would be most helpful for kind of seeing where his current price targets and anticipation of the melt-up are. I talked with him maybe 3 or 4 months ago, so that's a little, more antiquated, there you go, than some of the other more recent interviews that he has done. But all this being said, to summarize, Mr. Hunter expects the stock market to basically see a blow-off top even more aggressive than what it saw at the end of 2021. He basically sees the rally out of the COVID low to the end of 2021 as kind of the first leg of his melt-up, looking at general stock market in NASDAQ, S&P 500. Then the last 2 years, he roughly says that we've been in a consolidation range where the Fed's tightened, obviously. They've tightened very aggressively. Rates have risen very aggressively. Stock market has traded within a trading range. It's corrected some, rallied some recently, and then corrected some in the last couple of months. And this has built a lot of skepticism. Investors calling for, lower lows from here. They're definitely skeptical of this current rally, although this most recent week, I think, is maybe the beginning of a new shift in sentiment. I'll get into that later in terms of looking at some of the stocks, the winners of this last week, which, really most people who are bearish still and who were bearish a week ago were not expecting stocks like this to be up 30-40% in a week. And there's some pretty, stunning examples out there of fairly large companies that reported better than expected earnings and their stocks going up 30, sometimes more than that percent just a couple of days after that. So also yields came down pretty dramatically in the last week. I talked about that about a week ago. I'm not saying I called the bottom in bonds perfectly, but it was pretty telling just looking at how far in the gutter sentiment was on bonds, that something like that could happen. And I obviously expect this to continue, definitely not at the current rate. I don't expect rates to fall off a cliff from here, but I do expect them to trend downwards. They could, head back up a little bit, but all that being said, Fed obviously didn't do another rate hike this month. Jerome Powell did say that it's still on the table for December, and the market basically, took Jerome Powell's inch and took it a mile. And this is another one of David Hunter's talking points of almost bad news being good news, in the fact of, seeing the employment data come in worse than was anticipated. The stock market actually rallied aggressively on that. So it rallied aggressively on bad economic news, which makes no sense from kind of a fundamentalist view of how the stock market should work, except when you factor in, okay, the Fed's such a big player in the market at this point, that at this point the market is effectively seeing this as good news because they see, okay, the Fed is going to have to maybe even cut rates sooner than what they're expecting. So therefore this is good news. Now, I'm not trying to justify this. I'm more so saying this is probably one of the, more commonly held beliefs out there in terms of why stocks rallied in the last week. Not to mention just when everyone's so bearish when they're positioned that way, and then when things start going the opposite direction, it's very possible to have, a melt up, what David Hunter's talking about. But even looking in the last week, it's very possible to have stocks move very aggressively to the upside just on short covering and, people having to get out of their bearish positions that they've held. So that's another aspect of David Hunter's melt up. Not a huge one. I wouldn't say that he's just purely seeing it as a short squeeze. But, look at this last week. Treasury yields plunged on generally weak economic data. And yeah, S&P 500, Dow Jones, NASDAQ all rallied very aggressively in the last week. Roku, Arista Networks, Shopify, Palantir, Cameco, Pinterest, DraftKings, AMD are some of the biggest winners. And you could look at any of these stocks, and most of them will be up double digits in the last week. It's pretty remarkable just to look at the kind of rallies they've had. You know, there were some losers as well, Remitly and Paycom being a couple of those, but you know, it's maybe apparent that the stock market might be in this uptrend. You know, we will really have to wait to see, does this extreme, you know, rally, does it start from here? Does David Hunter's last kind of melt up rally start right now, or is it, you know, is it more of a gradual rally from here? I don't know. We'll really have to wait and see with that. But, you know, the Fed signaled no more rate hikes, at least yet. And so the stock market, you know, the market really took that as, you know, good news to go long, or at least to be less bearish. And, you know, part of this could also be investors beginning to go back into bonds. They've gotten out of bonds, generally speaking. Like I said a week ago, sentiment of bonds was in the toilet, even on treasuries, which kind of makes no sense because, you know, it's how the current system works. The Fed can basically back the treasury if they need to. So I guess the extreme bearishness in bonds I never quite understood. But yeah, you had a lot of, you know, these maybe more speculative, what fundamental value investors would see as overvalued tech stocks. And yes, they are overvalued on a fundamental basis, but they all rallied very heavily in the last week. But yeah, you see rates coming down. Yeah, you could continue to see this rally ultimately play into something like what Mr. Hunter has talked about for a couple of years now. He's definitely been early on this, and it's maybe interesting to go and look at his Twitter. There's some recent tweets and replies he's put out where he's effectively saying that he thinks this is the start of the melt up, the final blow off top. He's even said that he doesn't think that we need to get to new all-time highs on the S&P before that very steep leg starts. So apparently he's currently thinking that it'll start even right here, you know, under the all-time highs that were reached a couple of years ago. So, you know, Mr. Hunter's been early on this for sure. He's also been correctly bullish when so many have been very bearish the last 2+ years. So he's, you know, in my mind, he's got a lot of credibility for that. You know, he could be incorrect, but ultimately we'll have to watch and learn, as he likes to say. If he's proven incorrect, I think, you know, he's very honest in terms of saying, if I see data that suggests otherwise, I'll change my view. So far he has not, and so far that's, you know, played out okay for him. He hasn't really been proven incorrect or correct yet. I know there's a lot of people out there who like to give him flack, you know, for being way too early and things like that. And, you know, maybe some of his language 1 year ago or so. But, you know, ultimately nobody knows the future, and David Hunter's track record is a lot better than anyone else I've seen out there. So, you know, what do I have to go with on that? I don't know. But I'd like to hear all of your thoughts about this in the comment section below. What do you think about David Hunter, his melt-up thesis? Are we there yet? Maybe try to answer that question, and hope to see all of you again at some point.